My mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? We had to make sure to get a recording in this week because the trend has flipped. We are back on the run, back on the upward momentum, back on the upward swing, back at it again. And, you know, you got to beat your chest a little bit when times are good. So we've had some amazing runs in all the portfolios. Basically, markets across the board are up. But we're here because it's crypto portfolio updates. We're going to talk about Bitcoin. And the topic of this episode, what we're going to talk about after we go through the portfolio updates, so stick around, is the Bitcoin trend is flipped. Here's what I'm doing. So I'm going to give you guys some insights into how I'm looking at the market because the market has jumped back up a rung. We're well into the mid 70s, almost touching the 80s. And you got to make those adjustments. So I'm going to go ahead and bring to the screen. We're going to go ahead and jump right on into it. For those of you who have not done so yet, don't forget to do the likes, share, subscribe. For those of you on mobile, hype the video, all of which is going on down below there. And let's go ahead and jump into it. First things first, we got to give a shout out to CoinGecko, wealth of information every time we do these updates. And it's our point of reference. It's where I track my portfolio, kind of an easy place to get at a glance view of what's going on in the portfolio. So that way you can make the necessary adjustments as needed. First and foremost, we're going to go with obviously Bitcoin. We're peaked back above 76 there. We're just above 76,000. Over the weekend, we touched into the 78,000s. On the way towards 80, there's no straight lines up. I had to adjust some of my buys that I had out there in the ether because as the window of price action goes up, so do your bids. Ethereum is at $2,321.99. That puts BTC dominance at 57.6%, with Ethereum dominance at 10.6%, with gas fees on Ethereum at 2.33 Gwei. Easy to make moves, inexpensive. Moving right along, we're going to hit the top three trending coins. At number one, we have Rave DAO. At number two, we have Pudgy Penguins. And at number three, we have Aave. About to jump into the top five gainers and losers of the day. It's a good list. Now, we're going to start off with the gainers as always, because I hope everybody gets to bask in the glory of this list. But specifically, I want you to be basking in the glory of this list if you are three figures and above. Honestly, all gains are good gains, but I want the Wolfpack members, those of you who happen to be watching this, to just really have something that could, help out a lot. I want some life-altering wins. I want some 4-digit gains and somebody to have just hit the jackpot and got everything that they worked hard for. That's the circumstance that I want you on this list. So let's go ahead and jump into it because we do have a triple bagger today. Starting off at number one, we have at rank 149, Rave DAO with a gain of 122.5%. At number two, we have at rank 449, Open Campus with a gain of 91.9%. At number three, we have at rank 402, Rosa Inu with a gain of 46.6%. At number four, we have at rank 362, Unify AI Network with a gain of 44.4%. Lucky number four there. And last but not least, rounding out the list, we have it rank 685 based with a gain of 41.4% in the last 24 hours. Moving on to the top 5 losers. For those of you who do not know, this isn't a list you necessarily want to be on unless it fits into one of the 2 following categories. Number 1, you are looking to get into a position, nothing has fundamentally changed, and that position has somehow wound up on the top 5 losers list, giving you a healthy dip, which could create a good entry point. Number 2, you're dollar cost averaging like we do around here in the Wolf Pack. And nothing has fundamentally changed. Again, common thread here. Nothing has fundamentally changed. And people are running for the hills. They're upset. Things are happening. But again, nothing has fundamentally changed. And this is giving you an opportunity to buy a few extra coins, tokens, what have you. Get a little bit deeper into that position. Drop off a little bit. Start cutting off on that average buy price for those coins, tokens, what have you. Those are the only 2 reasons you need to be on this list. Otherwise, you need to run for the hills. I don't know what to tell you. Let's get into it. At number 1, we have a rank 660, Junction, with a loss of 25.6%. At number 2, we have at rank 682, Magna Finance, with a loss of 16.1%. At number 3, we have at rank 182, Genius, with a loss of 11.9%. At number 4, at rank 451, we have Yuldo Games with a loss of 11.6%. And last but not least, rounding out the top 5 losers for the day, we have at rank 714, Velvet, with a loss of 10.8%. Going on, moving over, time to look at some numbers. Let's take a look at what we got going on in the reserves here. Now, we haven't purchased any more Ethereum. We have Chainlink. We're actually going to be adding another coin because of a platform that I'm using called Nexo. Let's give the skinny here. The portfolio is up 2.4% in the last 24 hours. We are down 17.7% overall, obviously, because it is what it is. Like, we've been buying. We're tracking the growth here. This is actually just showing how dollar cost averaging works, because we were down 30% almost. Well, actually, we did touch 30%. And now we're at 17.7. We're still buying. Obviously, these are all deep buys because we were buying at above 100,000. We bought at 126. I have no problem buying all of the tops. I'm not the person who tries to wait to time the bottom. I buy regularly. Being fully invested, I buy every 2 weeks. So we've had a little bit of Bitcoin come in. Our total balance, obviously, this is split between 2 platforms. But our goal is for this year to get 0.25 Bitcoin active, meaning we're leveraging that. And that's going to be what we leverage moving forward. That'll be the active chunk of our Bitcoin, and then everything moving off of that will be put into cold storage. We'll go back to just stocking it away. But I'm going to have 0.25 that we'll have sitting on platforms to utilize as we can, as we do, to kind of help bolster some things, because that is one of the flywheels that can make this run in perpetuity when accompanied with the income portfolio. Now we got a little TradFi that we had to add in, so that way we can get out of the having to work phase of our existence. And once we get that built up big enough, any actually at a certain point we should be able to just pivot over to where whatever we have for the rest of the time we're working, or if we're choosing to do W-2 employment, would be just going straight into basically a strike account and getting, so that way I'm just getting paid in Bitcoin, and we will be on a Bitcoin standard, and we'll have the income portfolio obviously to handle the day-to-day expenses or life expenses, and then just stacking as much Bitcoin as possible with whatever's left over and all the W-2 income. Right now, all the W-2 income starts off primarily in the income portfolio. We are setting aside 10% every paycheck that goes directly in that I get paid in Bitcoin. So 10% of my income, I'm getting paid in Bitcoin now. Which segues perfectly over into what are we doing now that the trend has flipped? Those of you who know me, those of you who have been around a while, hello to you guys. You guys tap in every once in a while to let me know you're still here, still around. One of the things that is known for me is I am not good when the market's going up. I'm actually pretty god awful at that. That's the reason I don't trade. It also makes me not like buying as much, honestly. Like, I am complete inverse of basically everyone else. Everyone else is out of the market, not making moves when the market's down, and then when the market's up, they're heavy, wanting to do everything, moving and shaking over here. Me personally, I make moves when the market's down. When the market's up, that's just not, I don't know what to do. Like, it's just everybody's winning. Everyone's a genius. Like, it's not hard to buy anything because you're like, hey, this might keep going up. Hey, this might keep going up. And I'm not excited about it, to be honest. Like, it doesn't excite me. So with that said, being fully invested forces me to keep buying stuff. So let's break down where we're currently at. Where we are currently at, let me go ahead and make me a little bit bigger here because I'm talking. People need to listen to me. Oh, I don't want to be that big. Yeah, I like that size. Okay, so what are we... Actually, what's this look like? I don't like that one either. What about this? I don't like that either. Okay, I like that. That's my favorite. So, what are we doing? First and foremost, obviously, I have 10% that gets pulled out every check that goes into Bitcoin, no matter the price. That is a staple. That is a budgetary decision, I guess, as far as what we're doing to stay fully invested with our W-2 check. Income paycheck comes in, 10% of it, I'm getting paid in Bitcoin. Call that the 401k retirement fund, but better because I have access to it, and B, I'm retiring early, so the 401k really isn't doing me any benefit because at the pay rate that I'm at right now, I don't get any tax benefits off of that. It doesn't lower my tax bracket any. So there's not enough to make it matter, to make it worth not having that money or access to it until I'm 60 and having to work until I'm 60, 70, or 80, or whenever they're letting you retire, because apparently as a peasant, somebody tells you when you're done. I don't want to be in that boat. I don't want to be in the have to. I don't want to be in the I'm wealthy, but I don't have access to any of the cash, so I'm actually not that wealthy because I still have to go to work. We're going for getting done as quick as possible. That's what we're doing. We're streamlining the process. We're cutting out the middlemen. We don't want in it any longer than we have to be. So my amount that I would be putting towards what most of you do with your 401k, about 10%, which is actually better than what most of you are doing with your 401k. Most of you don't even have a 401k, nor do you have a portfolio. So we're winning either way at this point. The next thing that we're doing, obviously, now that we're back up in the 70s, that's going to wallop off 10% of what we were previously adding into amplified Bitcoin exposure. So now, instead of doing 30% of what goes into the brokerage going into the amplified Bitcoin exposure, which is basically long-term portfolio, we're back down to 20% of what's left. So for those of you who didn't know, that puts us in the realm of we were at 40% going over into Bitcoin. Well, hold on. So it's 10% no matter what, an additional 10% to amplified exposure no matter what. Under 80 is another 10. Yeah, so 20%. We were at 30, which totaled out to be 40%. But we're back in the 70s. So now that's another 10% that goes on over into making more income. And as that income grows, we'll start unlocking some more Bitcoin buying and amplified Bitcoin exposure and all that fun stuff as well. With the amplified Bitcoin exposure, we still got 20% going into amplified Bitcoin exposure in the long-term holdings portfolio. So what are we buying over there? I will tell you. Now, I did some research today. And as I was doing my research, this is what I look for, just so you guys know. Because, like, obviously, most of my portfolio is, how do we put this? Most of my portfolio is Bitcoin treasuries because I eat my own crow. Like, I believe in Bitcoin. I am on a Bitcoin standard. Obviously, it's a hybrid standard because I don't want to have to go to work. And I'm not egotistical enough to put all of my money into an asset that I also am not going to manipulate to be able to retire early without having to sell it, because I don't want to sell Bitcoin at all. So I'd rather my Bitcoin that I get a hold of never have to be sold and then build something to insulate that. Hence the traditional finance portfolio. Also, hence the traditional finance income portfolio. Also, hence the long-term holdings portfolio that is the majority of it's going to be Bitcoin treasury. There's a couple of other random things that are in there, but the majority of it is going to be Bitcoin treasuries. How does that work out? What am I buying? Now, we have quite a few positions, but generally speaking, especially when the trends change, what I look for in the research that I do is on what's on sale. What's the best deal? What's the best bang for your buck? And actually, the two top ones right now are, obviously, I've got it pulled up, Strategy, Go Fig. We're sitting at oh goodness, it's up to 170 already. Good Lord Jeebers. It's no fun. I mean, it's not that it's no fun. It's just I liked it better when it was at 129, 130, 128. I could just, it was easy. I knew I was going to have enough to buy a whole share. As it sits right now, we still will have enough to buy a whole share, but that's going to be cutting into some other funding that we've got. Because like before, I had a few months where that first 10% I could just buy a share of MicroStrategy. We are over 10 shares of MicroStrategy now in the portfolio. Tap in for the monthly update on my monthly portfolio update. We showed the actual brokerages. You get to see the actual numbers, the actual holding amounts, just so that people know I'm not capping, because I do give receipts. I give my receipts because this is documentation of my journey. But we're still going to be holding strong to buying one share of MicroStrategy every time we transfer money over, because that's Big Daddy. Also, it gives margin. And our long-term portfolio, we do have the ability to pull cash off that as needed. And, I'm kind of liking the cash pool that I have over there. And I like to keep that growing. So MicroStrategy is kind of the anchor point in that portfolio right now. Also, the reason that MicroStrategy is one of the best ones right now is because it's basically at par with their Bitcoin holdings, which is what I decide on how I'm investing in my treasuries, like where the money's flowing. That's how. Reason being is if they're selling at a discount or at par, at minimum at par to their Bitcoin holdings, the MNAV, which is the amount of Bitcoin that they're holding, it makes it an easier purchase because it's like, hey, this is on sale. This is selling for less than the Bitcoin that they're holding. And as long as they're not selling Bitcoin, that's a great deal. The other one that we're looking at is Strive, ASST. That is another treasury that I'm in. I was telling you guys about it at about 78, 80 cents. Shout out to Adam Livingston. He put this on my radar. I didn't just blink this into existence. I didn't know that there were other things besides MicroStrategy at the time. And it really wasn't the long-term portfolio, to be honest, wasn't my focus. It was getting the income portfolio actually up, running stably and compounding, which it now is. And along the way, as soon as it started kicking off a little bit of money and I was able to put some metrics in place to where if I was hitting certain numbers, I could invest in my long-term portfolio, and bringing the long-term portfolio into the fold as also potentially being a capital source for liquid cash for me to pull out as needed. These things start coming into play. Now, ASST you can't margin, you can't leverage it right now. I'm assuming at some point during the bull run, you will be able to, which is the reason we're stacking it up while it's more or less dirt cheap. I was talking about it at, what was it? 78, 80 cents. They had a reverse split. I was talking about it at, $6, $7. It's up 70% now. Like we're sitting pretty on that position, but it is still selling at a discount to their Bitcoin holdings. Bitcoin's just moving up, which also means that Strive has a larger amplification factor, which if you're long Bitcoin and, you have the TradFi side of it to have additional exposure, then this is a no-brainer. And then when we come through at the end of the year and scalp off 10% off the top of this portfolio from my Bitcoin treasuries, we'll be able to scoop that over and buy more spot Bitcoin. So that's kind of the system that I have running right now. That's what I'm looking at. The other positions that we're looking at, as far as what I'm holding, are Metaplanet, and 21 Capital. Those are big deals for me. They're also big, hefty holdings. We are going to be adding some more Metaplanet in as well. Basically, right now, we are working towards another position. Actually, you know what? Let me go ahead and pull that up, because that is, well, it's not Bitcoin related. It's a crypto stock, and it's a big one in my portfolio. We're getting it positioned in my portfolio because it's another position that we're looking at. The position we're currently working on right now, so it's Bitminer, or Bitmine, which is aiming to be the MSTR of Ethereum, which people will be like, oh my God, it's something else besides Bitcoin in your long-term holdings portfolio. Like, absolutely. First and foremost, this is marginable. So that's a good thing. Secondly, it's my second largest holding in crypto, which is Ethereum. Like, it just makes sense. Like, they're making a lot of money and they just buy and stake Ethereum. They're actually generating income off their Ethereum holdings. Bitminer, BMNR, for those of you who are going to go do your own research and look it up. It's not super expensive. It's sub $100, but the play on that is when Bitcoin runs, Ethereum runs. I've always had Ethereum. I also have Ethereum that I stake. We're getting ready to optimize the way that we're holding that Ethereum, so that way we can get some leverage off of it as well, potentially. But from a staking perspective, we're about to put it in position to get everything working. My crypto holdings, I keep them working. While I haven't been continuing to buy Ethereum, because I'm not allowing myself to do that until I get my 0.25 Bitcoin, and then I'll start allocating a portion of that income into stacking some more Ethereum, because Ethereum is on my list. Bitminer, having it in the portfolio, also gives me the TradFi side of that exposure and gives me the opportunity to leverage on the TradFi side. Actually, it's not even a preference. I like the ability to pull money and live out of my brokerage account. It is rather convenient. While I don't have a brokerage checking account companion set up yet, because I haven't figured out exactly how, once I start condensing down my bank accounts, because that's on my list of stuff to do probably in 2027, is to just get everything condensed down as much as possible based on efficiency and what I need. Because right now I have bank accounts all over the freaking place, and I think I'm going to start closing them / not using them anymore. Yeah, just to have that level of optimization is basically what it is. I'm going to get myself into a position where I am fully optimized, and that's probably the banking piece of it's going to happen in 2027. I'll get myself down to 1, maybe 2 bank accounts, maybe. And we're gonna see how that works. That's going to be an interesting process to document, because I don't actually, I have a lot of bank accounts. I'm just really bad at closing them, especially if they don't cost anything. I'm like, we'll just leave it out there with $1 in it, whatever. And it starts getting financially messy. So, but yeah, Bitminer's my Ethereum play. There aren't a lot of Ethereum treasuries. So Bitminer's already doing what MicroStrategy did. They were the first ones to do it. They made the pivot. And so that's an easy buy for me. We're going to get our 250 shares and just let it sit right on it and see how it goes. And that'll cover me for my treasury exposure, I guess. You know, I've got another position, maybe we'll see, that I'm thinking about throwing in the mix as well. But I've got a lot of irons in the fire. Like, I'm liking where my portfolio is at right now and the way that it's growing. So, you know, we're going to keep plugging away at getting those 250 shares. But as far as like the treasuries go, 90% of them are Bitcoin. The other actually all of my positions except for 4 hold Bitcoin, but I'm not going to be adding too many more positions. I don't think, like maybe 1, maybe 2. Actually, I'm adding 3. I'm adding 3 positions, and out of those, we're getting some stuff that's not Bitcoin related that we can actually start generating some income with. We're going to have some income generation in the portfolio. We're going to be playing that game a little bit over there as well, just not necessarily as focused as the other portfolios, but something, because I'll sit in the margin on my long-term portfolio. So I need a little bit of income generation over there just to cover those little buys. Like, I don't need like a ton of money getting generated over there, because I have the primary income portfolio, but I also don't want to have to constantly move cash over to pay my margin down. But, you know, we'll see. We will see. I'm excited about it. But that's what I'm doing during the bull run. And this is the part where, you know, I beat my chest, but I'm also in that same breath not knowing exactly what to do, because when everything's running and everybody's happy and everyone's excited, I'm not, because there really aren't any good deals. So being fully invested, you start just kind of buying stuff that you're not really worried about tanking super hard. You start looking at like safe income and stuff that's not highly volatile and all of those things. But unfortunately, on my long-term portfolio, everything's highly volatile, and it's kind of there's not a whole lot of stuff for me to do in there. And that's okay. That's okay. You got to follow the process. As long as I keep the money working, we'll have a lot sitting in those less volatile cash reserve style positions, is what'll happen at a certain point. But while we're under, I'm not really worried about it until we hit that next leg up, which is like us reclaiming 80. Once we reclaim 80, which was where I was like, hey, these are the bare minimums that I'm doing for crypto, then it'll be bare minimums that I'm doing for my Bitcoin buying and my long-term amplified Bitcoin exposure buying. And I'll probably just start stacking a lot of STRC and some of my closed-end funds, a lot of the stuff that's not swinging violently. And, we'll just keep buying. And then when those pullbacks happen, we'll deploy out of that pool. Like if I don't know what to do, I've got plenty of stuff. I've got plenty of options of things to buy. So yeah, we're going to leave it there. That's going to be the episode. I hope you guys got a lot of value out of this. I hope you guys are enjoying me tracking my journey and kind of rambling into the ether, talking about a little bit of crypto, talking about strategy, stuff that I'm doing, moves that I'm making. Don't forget to like, share, and subscribe. Tap in with me. Hit me down in the comments. Let me know what you guys are thinking. And yeah, I'm out of here. This has been another crypto portfolio updates on future financial strategies. I'm your boy, Reckless Ray Dinero, and I will see you when I see you. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't blame it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.